Silver usually follows gold a little bit. It's more volatile, but it does have bigger moves. So silver is currently below its all-time high. It still needs another 50% increase to sort of reach its all-time high. But that means that there's a lot more potential. So it's looking like a coiled spring when you look at the chart of silver. So I'm expecting very big moves.
Welcome back to NYC TV Live, everyone. I'm Kristen Scholler. Now, while we've seen volatility across a range of markets, including equities and digital assets, one commodity has seen significant gains, and that's gold. So joining me now from Jacksonville, Florida, is Hibbard, precious metals and alternative money specialist at GoldSilver.com. Alan, thank you so much for joining. And we've seen the price of gold trade at about $3,000 an ounce. What is driving this recent activity?
Yeah, well, thanks for having me. It's a lot of things. So most importantly, if you zoom out and look at the last 10 years, gold has been in a bull market for 10 years because of central bank gold buying. A lot of people are confused. They think that gold has only recently entered a bull run, but it's actually quite a long time. So we talk about tariffs recently, we talk about inflation recently and geopolitical tensions, but these are just the latest developments adding to an already long list of things that are contributing to a tailwind for gold. So absolutely everything is working in gold's favor right now. And people are starting to realize that there's only so much gold in the world, right? Even though it trades with all kinds of paper products, there's only so much physical to go around. So we're seeing a gold shortage, and everyone is trying to gobble it up, and that's moving the price a lot higher.
Okay, so I'm hearing supply and demand obviously is at play based on how much gold there is in the world. Alan, we also see volatility certainly playing out in the market right now. And gold, I think, over time has been considered more of a safe haven or a defensive asset, if you will. So what is your outlook from here in terms of where gold could go in the near and medium term?
Well, a lot higher, certainly. So like I said, everything is working in gold's favor. And what we're seeing in the markets is basically a capital rotation from risk-on assets to those safe haven assets that you mentioned, like gold. So, for example, if you look at the ratio of Dow Jones to gold or S&P to gold or NASDAQ to gold, any of these major ratios, they're currently elevated above their long-term averages, but they're coming back down. So we're seeing a reversion to the mean. That means that gold is currently outperforming all those major indices, and it is probably going to continue until the pendulum swings in the opposite direction. So for the next few years, I'm expecting gold to significantly outperform the stock market. And then eventually it'll swing back the other way. But it remains to be seen just how high gold goes in nominal terms.
What does that mean for other precious metals like silver, for instance?
Silver usually follows gold a little bit. It's more volatile, but it does have bigger moves. So silver is currently below its all-time high. It still needs another 50% increase to sort of reach its all-time high. But that means that there's a lot more potential. So it's looking like a coiled spring when you look at the chart of silver. So I'm expecting very big moves. And if we go back to the 1970s bull market, gold returned 25x, but silver was even more beyond that. It was maybe 36x or something like that. So really, really big moves are possible. And silver is probably going to lag gold a little bit, but ultimately move a lot higher.
You know, some people over the years, Alan, they have compared gold and cryptocurrency. Someone say crypto is a safe haven play. Others would say it is a store of value. Yes, I got the shrug on the safe haven, right? Because we know it's an incredibly risky asset as well. And so for our viewers watching, wondering, okay, how do I sort of, look at a gold versus a cryptocurrency when it comes to my portfolio? What would you tell them?
Yeah, the biggest thing to understand is that Bitcoin is a very separate thing from all the other cryptocurrencies. All the other cryptocurrencies are a lot like arcade tokens. They're not even like stocks because you don't actually get fractional ownership in the company's profits. So instead of owning a share in Chuck E. Cheese, you're just stockpiling Chuck E. Cheese arcade tokens. So if you want to play the Chuck E. Cheese games, go ahead and collect the tokens, and then you can use them all you want. But for the most part, all these other cryptocurrencies are something completely different from Bitcoin. Bitcoin is akin to digital gold. It's completely decentralized. It doesn't have a central issuer. It doesn't have somebody who's sort of controlling all the rules and trying to make it a fun place to be. So Bitcoin is completely separate from everything else. It's just like gold. And if you buy the thesis on gold, you probably should buy the thesis on Bitcoin.
Interesting.
It's decentralized store of value.
Okay, so if we do see more volatility in the stock market, I mean, we have seen Bitcoin move a bit more in tandem with stocks, high higher beta that is in terms of a risk appetite, whereas gold has been steadily moving higher, Alan, from what I'm gathering from you here. So what do you expect in terms of the volatility outlook and how that could impact a cryptocurrency like Bitcoin and gold?
Yeah, so Bitcoin is certainly much more volatile, and I think that's a product of it being such a young asset. So a lot of investors, a lot of speculators still aren't sure what that is, or they're trying to profit from the volatility and perhaps even contribute to it. And we don't see that with gold because gold is such a mature asset, with thousands of year history. So you don't get so much speculation in the price. So gold is much more stable, it's less volatile, and Bitcoin's volatility will probably shrink moving forward, but it will remain quite volatile over some time. So it's best to think about both of these assets really as part of a portfolio, not just one single asset in isolation. So if the volatility scares you, it should be a much smaller part of your portfolio, like 1 or 2%, not 100%.